Again, welcome everybody this evening. My name is Don Kaufman. Tonight you're watching how you can trade with a profitable edge. Of course, this is a TheoTrade presentation. If you've never been to a TheoTrade presentation before, all right, well, chat in right now. How many people here are brand new? Throw a hand up, let me know. You're brand new, you've never actually heard a TheoTrade presentation before, because tonight you're in for quite a little bit of a treat, a little bit of a surprise. All right, all right, so a couple of newbies. By the way, again, chat in. It's good. Next thing I want to throw up here, risk disclosure. We are not financial advisors nor a broker-dealer. For those of you that know a little bit about me, the reason I throw the risk disclosure up here is I had a 15-year career on the brokerage side of the business. Prior to that, I was in the professional trading side of the business. I also like to throw up no soliciting, no recording, and no photography. So again, we provide you a recording of this. I just laugh at that because it reminds me of going to the zoo. Don't feed the monkeys. Don't take pictures of the monkeys. Definitely don't record the monkeys. Don't worry, we're going to record this for you. Next thing, copyright disclaimer. You're not allowed to put this out there without our consent. We'll put it out there. All right. So, but if you do, we'll find you. The other reason we throw this up here, if you ever need to get a hold of me or anybody here at TheoTrade after this evening, okay, with all due respect, it's impossible to get a hold of people, today's society. Just go to support@theotrade.com, okay? We answer emails here. Seriously, we answer emails, hundreds of emails a day. I answer emails. All of the educators here at TheoTrade, we answer emails, and that's important to us. You can also give us a call, but email is it's a great turnaround for us because we even answer emails on the weekend. Next thing, a little bit about me. There's me, a little bit unshaven. I'm co-founder here of TheoTrade. I started trading in the late 90s out of Chicago. I was a derivatives risk manager for a firm there in Chicago. I actually come from a family of traders. My family started trading in the early 1970s. At one point, they had owned over 500 seats on exchanges around the world. They sold the entire firm in the early 90s. The firm that basically they founded, they sold it in the late 90s. They sold that firm to UBS. So that's obviously still in business today, one of the larger banking firms. That's kind of got me involved in this industry. Early on in my career, I got a really good piece of advice. They said, get off the trading floors, get out of the Chicago professional world, go into the retail world. So I was invited to a startup brokerage firm. That brokerage firm was called Thinkorswim. I was with Thinkorswim very, very early on, early 2000s, and went through 7 years later. I was there when we took the company public. I was there when we were acquired by TD Ameritrade. I went on to actually build and run education for TD Ameritrade for 6 years. Before finally hanging it up in, again, 2015 is when I hung it up at TD Ameritrade. And of course, we built none other than TheoTrade. So a little bit about my background. We've done a couple of CNBC tours, over the years. This is one that, if you're going to be proud of one of them, they put me head to head with Kevin O'Leary. He's actually couldn't be a nicer guy. I say that all the time. People are like, nah, he's got to be mean. Actually, really couldn't be a nicer guy. We talked for a good 15 minutes before this thing even broadcasted. And again, great guy. I hate to tell you that, but he really was a great guy. Next thing, a little bit about TheoTrade. We specialize in education, stocks, options, and futures. Those are very seamless products. When I say seamless, there's, stock traders and options traders and futures traders. They're commingled today, stocks, options, and futures, and we trade them all. And we're founded here at TheoTrade by professional traders, okay, and trading educators with a minimum of 15 years professional trading experience. A couple of us have a few decades under our belt. And TheoTrade is here, first and foremost, to help you mitigate the risk in the marketplace. But it's also about learning a skill set that can last a lifetime. And I stress this time and time again. Risk mitigation has to be first and foremost. That is, whatever capital you're going to put at risk in the marketplace, okay? Let's control those risks. You're going to learn a lot about that this evening. Speaking of TheoTrade, one other aspect I think it's imperative to always mention before I get into this is, what is a TheoTrade? Who is a TheoTrade? Okay, TheoTrade is not just myself, Don Kaufman. But TheoTrade, we now have 7 full-time instructors. And this is, to me, it's kind of like the dream team of traders that I've put together. This is Jeff Bierman. He's the analyst trader and former chief market technician for TD Ameritrade. Jeff Bierman, we call him the professor. He's also a professor at Loyola in Chicago. So he moonlights with us here at TheoTrade. He works with us during the day, and he actually teaches a couple of classes in the evening at Loyola. But again, he worked with me at TD Ameritrade for 7 years. Matt Williamson, that's our market neutral, or what we term our premium selling strategist. Next on the list, we have Corey Rosenblum. He's our senior strategist, okay, kind of our resident swing trader. For those of you that are familiar with swing trading, Corey Rosenblum's the resident swing trader. Next on the list, another gentleman that worked with me at TD Ameritrade, Brandon Chapman. Brandon, he's CMT, macroeconomics, technicals, and fundamentals. Brandon has actually written many of the tests for the CMT. For those of you who have no idea what a CMT is, it's a wildly difficult certification to get through. And if you get through it, you are unbelievable in terms of technical analysis. So Brandon is actually working for the CMT board in writing the questions now for the tests. Steve, better known as Slim Miller. Slim, semi-retired 43-year veteran stock options and futures trader. So Slim now 43-year career, phenomenal trader. Actually started, and I've known Slim since literally since I'm a kid. He traded with my family all the way back to the 1970s. And I say he's semi-retired. What does he do? He trades. Comes on here at TheoTrade from time to time, and when I say time to time, several times a week. Tony Rago, NASDAQ futures and intraday strategist. So this is our resident futures trader here at TheoTrade. Now, I wanted to introduce you to the crew, okay? Before we go any further, I think it's also important to put this to you. Are you willing to put forth effort? Okay? Are you willing to put forth effort? Listen, what we're going to talk about tonight, and I just stress this from time to time, it's important. It's going to be a fast-paced course this evening, okay? The following course material, it can be a little bit demanding to learn. I'm going to stretch what you're capable of, and I'm going to stretch your knowledge base in this business right here, right now. So this course, this is not going to be some chart pattern or follow the bouncing ball. Okay, listen, people tune into stuff constantly, and it's amazing. They're like, I did, umpteen years of research, and if you just follow everything I do, you're going to make money. Okay, this has nothing to do with that. You're not going to, a couple of green arrows, a couple of red arrows, yada, yada, yada. I'm making money off of it. You believe that? Come on. I mean, listen, got some swampland in Florida for you as well. So this is going to be, all right, this is going to be, if you really want to learn this business, this isn't going to be some instant coffee, instant tea. You got to put forth some effort. What we're going to talk about tonight, okay, is going to be a skill set based on statistical data. All right, what we are about to discuss involves market makers, hedging activity, and changes in market structure. So what we're going to look at when we're talking about, the key tonight is, how do you go out there and find a definitive or what we term profitable edge? And for that, okay, again, there's changes in market structure, there's statistical data, and I'm going to show you where that edge exists. With that, let's get into it. All right, everybody ready? This is going to be important. Okay. By the way, somebody already asked a question. Put forth effort. What does that mean? I know. It's tough these days, but you want to make some money in this business, you're going to have to put forth and learn a little bit. So market manipulation. So the word manipulation, I think manipulation is a strong word when it comes to the markets. Okay. Nobody wants to believe, okay, that markets are manipulated or controlled. In the next 60 minutes we have together today, I'm going to share with you, number one, okay, how market manipulation occurs. Okay. The second thing, why manipulation is completely par for the course. And then the last portion of this is strategies that you can take advantage, like immediately, to take advantage of that manipulation. What I'm saying is, people, they hear this word all the time, edge. They're trying to get an edge in this business. Okay, I'm going to show you exactly what that means, but more importantly, how can you go after, okay, that edge? Like, how can you go after that quote unquote manipulation in the markets? Now, to get into this, first we have to get in the know. Guys ready? All right, when I say get in the know, You may not know where markets are going, but you can measure how far the markets can move within a given period of time. Now, the first thing that I want to elaborate upon tonight, I'm not telling you where markets are going. Neither is anybody else. Okay. News flash. All right. Let me just throw this out to you. If you looked at any of the hedge fund managers the last couple of years, look at the hedge fund managers. Do you realize the hedge fund business is complete and utter shambles? Why? Because nobody knows nothing. Even the Fed doesn't know what's going on. The Fed was like, we're going to raise rates. That was in December. Okay. The beginning of January, complete 180. Stop. We don't even know what we're doing. Let's complete 180. We're not going to raise rates. Just kidding. That's what's going on, right? So I don't want to hear that, all right, I know which way the market's going to go. This doesn't matter. This is about statistical edge, okay? What we're going to talk about right now is how far the markets can move in a given period of time, because that's what's essential. This normal fluctuation in markets, we talk about normal fluctuation. Markets go up, markets go down, right? Normal fluctuations. It's what we term expected move. So the first thing we're going to talk about, okay, is what I term what to expect with expected moves. Expected move, it does not tell us which way the markets are going, okay? It doesn't tell you which way the market's going, but it does tell us the approximate movement in equity. An equity means stock, or index. Index means something like the S&Ps, right? So it's going to tell us the equity or index product is likely to encounter within a defined period of time. Would this information, would that be helpful for you? Okay. If I could tell you, like, all right, listen, I know everybody wants to sit here and they go, are we going up or going down? You got to buy that software with a couple of green arrows up and one arrow down. It's bullish. Listen, I told you that's a game, and it's a game that you're always going to lose. I know there's a latest, greatest piece of software that's always going to tell you which direction the market's going to go. Okay. And I'm telling you right now, I've been involved in this business for 21 years. My family's been in it since the 1970s. Let me tell you something. Nobody knows nothing. You like that? Nobody knows nothing, especially right now. We can do is we can kind of what we term handicap movement, right? If I could tell you how far a stock could go up or how far a stock could go down with a great degree of certainty, is that going to help? Yes. Why? Well, we're going to get into that. All right? We good here? So with this, expected moves explained. So let's explain a little bit about what's expected. All right. We're going to have a stock, and I'm just going to make this right now a fictitious stock because we're going to do a real example here momentarily. But here's a stock. And by the way, I like to call every fictitious stock, I actually call it stock. All right, so it's stock. And stock, let's say, is trading at $200. Now, we're not going to own the stock. We're not having to do anything with the stock. But we are going to, in fact, look at the stock's options. All right. For those of you that have absolutely no idea what an option is, that's okay. All right. Kind of curious, huh? All right. Everybody chat in right now. Do you know anything about options? Anything? Yes or no? It's just a Y or an N. Do you know anything about options? All right. I know it's like pulling teeth to get people to answer anything, but all right. Okay. Oh, yes. Oh, wow. Okay. Almost every single person on this evening knows a little bit about options, which is okay. By the way, those of you that don't, follow along, go for the big concepts over here, because we are going to talk a little bit about options. Don't let it intimidate you, because everybody, he said the O word. All right, the O word is options, by the way. Options is okay to talk about. So here's the stock, and the stock is trading right at 200. We're going to look at what's called a 200 call, okay? And we're going to look at what's called a 200 put. The call is going to be trading for, let's say, $3. The put is going to be trading for, let's say, $3, right? So what's a 200 call? 200 call gives you the right to buy the stock at 200. A 200 put gives you the right to do what? Sell the stock at 200. All you have to do, okay, to understand expected moves is add what we term an at the money call to an at the money put. This is an at the money call, an at the money put. People go, I don't know what money means. This is the money. The stock price is 200. So what we do is we add, okay, a 200 call, add it to a 200 put. So what do you get? If you went out and you bought both of those for $3, what would it equal? All right. You go boop, 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 boop. By the way, you're paying, okay, for it. Cost you $6. Okay, so $6. What is $6? Why $6? Well, $6, all right, would equate, okay, to the total value, again, if you bought both a call and a put. So if the stock is trading at 200, all right, we would have to go all the way up, if we bought both of these, to 206 to break even to the upside, or what, to the downside? Well, it's 200 minus $6, which comes out to 194. Okay, those are the stock prices that you would need to be able to break even if you purchased both a call and a put. This is actually what we call a straddle. Okay, now, again, I want to reiterate this. That's a straddle. Are we going out and buying straddles tonight? Absolutely, unequivocally, no. What the call and put tell us, okay, and this is the part that people forget. The put and call tell us, okay, what expected move is. Because the options are trading for $3 each, and we're actually going to assign a time frame to those options. We're going to say the options trade, okay, for $3, and this is all good, okay, for 1 week of time. Just 1 week. And you're like, that's expensive for a week. Well, stock, okay, can move a little bit. It's crazy. It's a crazy stock. It's Netflix, let's call it. Now, if that is trading for $6, what that means is this stock is poised to move at least up $6 and down $6. Okay, and it's going to stay in that range with a very, very high certainty. Now, let's blank the board really quick because there's a lot going on, obviously, on that screen. You're like, what? I'm a little bit lost, okay? Remember, we have the stock, and the stock is trading $200, okay? $200. Now, we have this expected move, and the expected move, all right, says we're capable of moving up $6 or down $6. Now, do the options have any directional bias to them? Remember, we're supposed to move up to 206, okay, or down to 194, which is, again, it's what we call +6 or -6. That's what we term the expected move. That's what the options are anticipating. Now, how long is it going to occur? Between now and 1 week from now. Okay? How does that data help you? First of all, if the options are saying we can move up $6 or down $6, right? It's telling you kind of the risk of the stock within the next week. Is that helpful? Of course. I mean, if you're going to place a stop order, anytime in the next week, and you know the stock is capable of moving up $6 or down $6, you better look out. Because the option market is depicting what risk is going to be. And then everybody asks that question, like, is the option market accurate? I'm going to show you that. Okay? I'm going to show you that. And I'm trying to keep this example as clean as possible. I'm not talking about skew for those of you that are engineers in here. Okay? I don't want to get crazy with it. Right? But again, you go out and buy a call and buy a put. I'm not depicting that this is going to even make money. You buy a call and buy a put, you're going to lose money over time. And I'm going to show you why. All I want you to understand at this point, that the at-the-money call and the at-the-money put added together are the equivalency of expected move. Now, we're going to move forward just a little bit. Expected move and probability. Expected move defines a 1 standard deviation move. It's 68.3% of the time. That blows people's minds. They're like, what? Okay, back to the curve for a second. That range that I talked about, the expected move, that range, okay, is defined as happening 68% of the time. So if you go out, and you're expecting the stock to move up $6 or down $6, you're immediately going to ask, how often does that happen? Happens about 68% of the time. What happens then the other 32% of the time? Question mark. Crazy things, right? This is just a distribution curve. This is how some of you got through college. This is how some of you got through high school, right? This is how some of you, like, everything you do in your life can fit under a distribution curve. You know, there's really, really good drivers, which are up here in the curve. There's really, really bad drivers. And then there's Los Angeles, which is somewhere down here, right? I mean, think about that for a second, though. Everything you kind of do can fit under this kind of curve. Now, so expected move is a probability. So there's about a 68% probability, the underlying, of closing inside the expected move. I said by a designated expiration, 1 week. Expected move, it's a probability of expiring inside that given range. Now, let's continue on. Expected move. Now, trading applications, some of them have expected move, some of them do not have expected move. Again, you can use the at the money straddle as an alternative to expected move. So let's get into it. Here's the, by the way, we go from a couple of words on the screen to boom, right into a full-blown trading application. This is the straddle price and the expected move. All I want to show you in this, and I love the example I picked. I didn't pick anything exciting. I picked Walmart. Walmart. Yeah. By the way, Walmart doesn't have like a big tone to it. You're like, yeah, it's Walmart. Not too exciting at all. But Walmart, all right, the expected move as depicted here. And by the way, this happens to be the Thinkorswim platform, but you don't need the Thinkorswim platform, okay? The expected move here is $1.36, okay? And by the way, how many people here are already on Thinkorswim or have used some? It's TD Ameritrade, okay? If you've used it, great. If you haven't, all right, why do I show this? Why do I show this? Number one, I worked at Thinkorswim for 15 years. Number two, this is part of my baby, okay? My baby was, the expected move calculations. My baby was the Analyze tab of Thinkorswim. So if you've ever, by the way, for those of you that have used Thinkorswim, if you've ever been on the Analyze tab and you've literally cursed the person that put portions of that together, I'm your guy, baby. I'm your guy. Take your shots. Take your shots right now. If you ever have an Analyze tab question, okay, I'm your boy. I'm your boy. No question about it. But it's okay. You don't have to have it. I don't care. Okay. So listen. Technology has become commoditized. I think we were ahead of the game 15 years ago. Now, it's par for the course. Anyway, with this, the expected move is $1.35. All I'm showing in this slide is you could have this little expected move up here, or you could just add the puts to the calls. And guess what? The puts to the calls added together equals $1.32. Here's the $1.32. Or, okay, you have the $1.36 over here. It's the same thing. Who cares? Right? But what you're going to learn tonight is why this is insightful. Why is that insightful? Like, what can you use that expected move for? Right? Here's the down and dirty on this entire thing. I call it volatility, probability, expected move. Traders and investors alike, they spend tens of thousands of hours consulting charts, okay, trying to figure out the next move. Everybody's looking at the next move. What's going to happen? I don't know. What's going to happen? They turn on CNBC. What is going to happen? All right. Let me just tell you about CNBC. I've done CNBC dozens and dozens of times. Okay. I did a TV show earlier today. I literally did a TV spot earlier today. The fun part of it is you don't even know the stocks that they're going to do until 20 minutes before a producer tells you, Don, are going to talk about Campbell Soup. That was my stock today. That was literally my stock. I talked about Campbell Soup today. I don't really trade Campbell Soup. They also had me talking about Lowe's. I do talk about Lowe's. That's, that one I know. It's coming out with earnings tomorrow morning. But I'm just making a quick point. Everybody's like, well, what's going to happen? What's going to happen? I'm like, Campbell Soup. I don't really eat it. I'm not a fan. But it has nothing to do with the movement. You got to understand that options pricing and volatility, it gives you a real skin in the game marketplace on what the world perceives risk and movement to be. Like, I can't stress that enough. Go back a slide over here. When this little expected move says $1.36, okay, when it says $1.36, time out for 1 second. I want to know how much capital might be traded on the notion that this stock is supposed to move $1.36. How much capital is traded because that stock is supposed to move $1.36? I want to know that. Okay? What? A few billion? I don't know. Look, there's 17,000 open contracts right there. There's another 3,000, another 2,000, another 2,000. Okay? A few thousand on this side. That's just in the 3-day options. Do you understand that the expected move isn't just some crazy formula? It's billions of dollars setting a marketplace. Does everybody get that? It's billions of dollars setting a marketplace. Okay? And, when you're looking at this, you have to understand, what can you use that for? I don't know. You could use it for risk management. All right? If you know a stock is going to move $10, for instance, in the next week, that might scare you to death. Think about how much capital that might have saved you. Anybody. Okay? Just that little nuance. Okay? If you just knew a little bit about expected move. How many people here would probably have saved, okay, a boatload of money because you wouldn't necessarily have gone in there and traded a product, right? You know, if you saw this and it said Walmart and this said like $12, you'd be like, what the? I'm out of here, baby. I want nothing to do with it. It's supposed to move $12 in the next 3 days. All you had to do was figure out the expected move. That's it. Seriously, how many people here would have saved, I don't know, a couple hundred, couple $1,000s on that front? And you think about something like, you know, December 24th. And when I say December 24th, I was talking about, you know, December 24th of 2018. The markets were absolutely tanking. What everybody like fails to remember, did you look at the risk metrics in the days to come into that? Meaning that the market was supposed to move that big. It just did what it was supposed to do. And most people, oh, I had no idea. Okay? I had absolutely no idea. Nah, nobody here wants to admit it. Come on, people. Admitting it's the first step today. Even if you're watching this in a recording, talk to the recording. So to get down and dirty on volatility, the expected moves are depicting how far the stock's supposed to move in a given period of time. But the question that everybody inevitably asks, does this stuff really work? Okay, let's take a look at a few recent examples in the SPX. Okay, question, how many people here are familiar with the SPX? Anybody? Okay, anybody? How many people here are familiar with the SPX? All right, the SPX, the granddaddy of all products, big and small. By the way, the SPX, the spiders, whatever does it for you, okay? You know, the SPX, I actually call the SPX the mother of all option products. I've also possibly called it the Widowmaker in the past, because if you don't know what you're doing in here, ooh, it's going to hurt. It's going to hurt a lot. All right, okay? It's a dangerous product. What you're looking at here in the SPX, it's just a chart of the SPX. That's it. It's a chart. See these little hash marks? There's hash marks, hash marks, hash marks everywhere. These are the expected moves. They're expected moves. They're expected moves drawn each and every single week. Every single week we draw the expected moves. You're like, well, why? Well, I'm going to come to that here momentarily. When I say the expected moves, right? You're drawing, all right, for instance, on a Saturday, I'm telling you what the market's going to move. Up or down, I'm going to tell you what the market's going to move, okay, on a Saturday for the following Friday. Looks like this. I zoomed in, okay? I zoomed in. So, right, this is this week. This is today, right? The upper end of the expected move, the lower end of the expected move. Now, I draw these, okay, on a Saturday for the future Friday. Everybody can do this. And by the way, if you think you can't do it, we actually have a piece of technology that does it for you. So there's a script, and we can give you a script, and the script will actually draw all these expected moves for you. So don't even worry about it. Like, we share everything here at TheoTrade. Everything. There's no, you know, it's a proprietary script. There's nothing proprietary. Okay? If somebody doesn't want to give you something, that's because that something doesn't work. This crap, this works. What I want to show you, okay, what I want to show you is just this year, and we all recognize this has been a fairly wild start to a year. It's an absolute rip and rally. This is the very first trading days of the entire year. In fact, I apologize. Let me switch to a slightly brighter color. First trading days of the year. Look at this. That's the edge of the expected move. We tagged it. Here's the edge of the expected move. We tagged it. Here's the edge of an expected move. We tagged it. Here's the edge of the expected move. We tagged it. Look at this. Okay. All I'm telling you. Okay. Here's one. We just missed the edge of the expected move. Here's a week. We hit the edge of the expected move. And that's us popping outside of it. Okay. Last week was nothing. Absolutely nothing. All I'm saying, okay, in this particular circumstance, it is uncanny, all right, how we are constantly hitting the edges, if you will, of these expected moves each and every week. Why? And more importantly, how am I going to profit from that? You're like, great. First of all, you don't know whether the stock is going to go up or down. I told you, though, earlier, that doesn't make a difference. That doesn't make a difference, okay? This right now, just focus on the SPX. Just focus on the SPX. Forget about, by the way, if you could find an edge in the marketplace, even if that marketplace is just the SPX, does it matter? People go, does this work in Apple? Forget about Apple. Forget about Facebook. Forget about Google. Forget about Walmart. If you can find an edge just in the S&Ps, wouldn't that be worth it? Right? Wouldn't it be worth it? Okay. Well, there's an edge in here, and the edge is this. Okay. We're adhering to the edges of this expected move. We're constantly coming to the edge and skirting the edge of these expected moves, skirting the edge. When I say skirting it, we're riding to the edge of the expected move. Here, we rode to the edge of the expected move. We did pop outside of it, but that's okay. There's more than enough time to show profitability here. We rode to the edge of the expected move. Look at all of them, all right? It's just time and time and time again. Listen, don't take my word for it. You can go back. I'll give you the data. You can go back. You can go back for what? 3 years. You can go back 5 years, and you're going to see time and time and time again. Look at some of these. There's wild moves that happen in here. Wild moves. You see right here, it's one of the most wild moves. Did you know that that was very much predicted? That was February. That was the big volatility explosion. That was the previous February. Okay? Remember I was talking about how many people would have saved some money if they understood this stuff? Look, we were expected to move all the way down here. Okay? In what? December 24th. Where did we move? Just shy of it. The market was actually anticipating us to move more than it did. Think about that. This stuff is huge. Absolutely huge. I could go all day. I could show you how expected moves have projected the closing ranges for the SPX all day long. These expected moves are what we term statistically significant. Statistically significant, it just means we've done our homework and these expected moves are happening consistently, right? So as I said earlier, what's really going on, okay, behind the scenes over here, and I'm going to get to this point, for those of you that are like engineering geeks, we're supposed to be inside this range 68% of the time. But right now, we're inside that range as high as 83% of the time. That should translate right there. There's some edge in knowing that. Okay? More importantly, though, how can you translate expected moves into you making money? Right? Now, before we go any further, okay, the single most important thing. It's the most important product in the markets. Okay, there's going to be some bold statements over here. So, the SPX is the single most important product in today's marketplace. Now, I know some people don't trade SPX. Some people have nothing to do with the SPX. You don't even know what the SPX is. That's fine. The SPX is a $2,800 options-only product. There was no stock, okay, and it's not an ETF. There's not an ETF. It's not a stock. It's just a cash-settled options-only product. But why is the SPX the single most important product? Allow me to present to you some invaluable data, okay? Why, okay, do SPX options have so much importance? Now, the average volume, by the way, 2018, 2019, we're so early. Listen, we're so early into 2019 that I kept some of the 2018 data in here, right? In 2018, the average daily options volume was 20 million contracts a day. Okay, so forget about everything about expected move for just a second. Just focus on this because this is important. The average daily options volume was 20 million contracts a day, right? So here's, by the way, here's this year's average. We're a little light. We're a little light this year. Okay, well, the reason the volume was pumped up is because if you looked at like October, November, December of 2018, we were rocking, baby. This year, not as much. Okay, not as much. Now, let's go to the SPX volume statistics. You're like, what? This is SPX weeklies. You're like, what's a weekly? A weekly is a Friday, a Wednesday, and a Monday. The weeklies, right? What's that mean? It means there's no more expiration Friday. We have an expiration on Monday. We have an expiration on Wednesday. We have an expiration on Friday. Almost every day is expiration. What's crazy about the weeklies is the weekly volume has actually started to eclipse. Okay, the weekly volume has started to eclipse the standard SPX options. What? Yeah, everybody wants to trade Monday, Wednesdays, and Fridays. It's kind of cool. So let's go into the SPX statistics. SPX volume statistics. This is actually, okay, fairly recent data. It's the most recent I can find. The average daily volume for the SPX, by the way, they're celebrating their 35th year, is right around 1.44 million contracts. You're like, oh, okay, where are we going with this? All right, wait, just wait. We're doing 1.4 million contracts just in the SPX. It gets good. There's 19.3 million option contracts traded a day in 2019. Okay? Now, by the way, I apologize over here. That's supposed to say 2019 because I switched the data on you over here. So the options in 2019 are averaging approximately 1.4 million of those contracts. So think about this for a second. but the SPX is trading for near 2,800. You're like, what? I just want you to, for a second, compare it to Apple. What's Apple? Okay. What's Facebook? I mean, look, we're talking about $150 stock. So if you trade, okay, Apple options or Facebook options or, something like that, you're looking at like $150 stocks. Now, granted, okay, there's stocks like Google or Amazon. Google and Amazon have some big boy options, but most of the stocks, $150, $200 stocks. The SPX is a $2,800 stock. So the SPX contracts are roughly 20 to 30 times the size of the average option contract traded. By the way, the SPY tracks the SPX, and it's good for an additional 3 million contracts per day. You're like, I'm totally lost right now. You should be. It's okay. Hold on. This part's going to get good. You ready? You ready? Do the math. Okay, do the math. 1.4 million SPX contracts plus 3 million SPY contracts. So we know that the SPX and the SPY, what are they? They're the same thing. They're like the exact same thing. You add them up. Why should I add them up? Because they're equivalent to 4.4 million contracts. Oh, okay. Now, there's only 19 million contracts traded a day. So 23% of the daily options volume on any given day is directly related to the SPX. By the way, the VIX is also good for almost 1 million contracts a day, but I didn't want to confuse you, okay? You have to realize that the entire marketplace right now of options is ruled by the SPX. That's what people trade. They trade the SPX, they trade the spiders, okay? But in terms of notional value, what's notional value? That's the actual capital traded, right? Remember that the SPX options are 20 to 30 times the size of standardized option contracts. Remember that, okay? What we're telling you here is that over 60% of the value traded per day in options belongs to the SPX. 60%, okay, of the actual notional value belongs to what? Belongs to the SPX. It's crazy high. This is the notional value, okay, of average daily volume. $390 billion a day goes through the SPX. That's just the options. Okay. By the way, that doesn't count the SPX, it doesn't count the spiders. It doesn't count the spiders. Look at this. The entire marketplace is fixated on the SPX. Do you think that means something? Okay. Let me ask you this question. If everybody is kind of trading into these options, let me ask the question, can that move markets? Yes or no? Can that move markets? If everybody's trading in the same product, can it move markets? Can it influence markets? That's what we're kind of getting at, right? Because a lot of people are not familiar with some of these statistics, and nobody's out there like talking about this stuff. Wow, only like 10 people so far have come in and be like, I think so. Okay, I absolutely think so. First of all, when you trade the SPX, okay, you hedge in the E-mini S&P futures. I told you, this is not easy stuff. Like if you're brand new, you're like, the little hamster is getting stuck in the wheel. I can't keep up. Okay, the SPX is being traded so heavily. And when the SPX options are traded heavily, they're trading futures contracts to hedge the risk of the SPX. And what it's doing, okay, is it's locking the market in tighter and tighter volatility ranges. But what changed? Like, why did all of this change? Why is there so much capital? Okay, this is the real question. Why the spike in capital right here? It went astronomical in 2017 and 2018. Why did the amount of capital get traded? I know. I have an answer for you. What changed in the markets? In February of 2016, they added Wednesday options. They already had Friday options. Okay, this is a press release. February of 2016, they added Wednesday options. Wait, the Wednesday options were such a hit that in July of 2016, they said, the heck with it. Let's add Monday options too. So they added Monday options. Think about that. Look, you see the spike. The spike right there in 2017 is because they added these weekly options. Behold, the SPX options, they've completely changed the game. It's because of a product change. They changed the nature of the entire marketplace. Years from now, traders, they're going to be discussing how the addition of multi-week, Monday, Wednesday, and Friday, okay, in 2016 totally changed the game. No one is talking about this. No one's talking about the efficiency of the markets is way beyond what's ever been recorded in the history of this business. Nobody's talking about that, right? Our research attributes the level of efficiency to the onset of multiple weekly expiration. It's Monday, Wednesday, and Friday options. As market makers hedge funds and risk managers, they're hedging the collective risk using these options, okay? And the markets are moving directly to what is expected. This is a screenshot down below. This is a screenshot from today. It's a screenshot from today, and I wanted to show you something even more interesting. Look, there's an expiration here for February 27th, but there's also one for the 28th, and there's one for March 1st. Now, they even added end-of-month options. So we have an expiration Wednesday, an expiration Thursday, and an expiration Friday. Why does that change the market? Look to the right-hand side of the screen, people. There's an expected move, an expected move, and an expected move. Why is this so important? Nothing is ambiguous. Nothing's ambiguous. You know the market's telling you this is what we're going to move. This is what we're going to move. This is what we're going to move. And people go, it's a stupid calculation. It's not a stupid calculation. There's $390 billion a day trading through these options. If there's $390 billion a day trading through those options, people have bet their life that we're going to move $15, and we will. Okay, people have bet their life they're going to move $22. And sure, once in a blue moon, we're going to move outside of that. Okay, once in a blue moon, but this stuff is critical. It's changed the entire game. And I love this week. This is, by the way, I picked out this week to talk about this because there are 4 expirations this week. There was a Monday, there's a Wednesday, a Thursday, and a Friday. It's pretty cool. Summation of the SPX options. The SPX and the Spider options are now expiring 3 times a week. In some cases, 4 times a week, okay, with end-of-month options. The additional options expiration, the Monday, the Wednesday, the Friday, have changed market behavior via creating relatively measurable market moves via looking at what's termed expected move. TheoTrade has developed a low-risk strategy, that's important, to envelop these expected moves. And we've developed a script to track the expected moves. Now, here's the hard part. You got to turn what I just talked about. You're like, I expected moves, I'm out of breath, I don't even know what I'm doing here. You got to turn data into trades. Okay? Data into trades. You know, you can be a data geek. I am a little bit of a data geek. Okay? But in the end, I'm a trader, and you have to be able to turn this into a trade. Sure, research sounds great. But the reality is you need to be capable of applying what you've learned, okay, and converting this into specific trade ideas. In other words, you got to take this research and you got to run with it. See, we're running with it. I think that's a Mac. Don't run with a Mac. Okay? Low risk, high return. Let's get down and dirty. Low risk, high return. Let's get down and dirty again. How do you position yourself most effectively around these SPX or spiders or equity expected moves without absorbing large amounts of risk? But I'm going to tell you right now, okay? I'm going to tell you right now, when you start to get into these expected moves, listen, you look at the expected move. It works. We're supposed to migrate here. We're supposed to migrate here. Once in a blue moon, though, we make a huge move to the outside, right? So what we need to do is we need to go, okay, for a full throttle. Like we need to go for where we can get some strong profitability, but you got to minimize the risk. Why do you got to minimize the risk? Because I don't necessarily know whether we're going up or whether we're going down. I don't mind telling you that, right? I know everybody's like, I want the software that tells me which way the market's going to go. I'm not going to give you that, but I'm going to give you the right strategy to use in this. So how can we apply this, okay, to specific trade opportunities and more importantly, to generate potential profits? We're going to look at butterfly spreads. People, butterflies, it's an age-old strategy, and I'm going to talk about that. We're going to use the most standard low-risk butterfly spread in order to take advantage of SPX weekly expected moves. The idea, by the way, some people have no idea what a butterfly is. That's okay. But the idea is easy. You just want to achieve maximum reward for minimal upfront costs. The butterfly spreads around expected moves. It just screams, limit your exposure and maximize your potential. Limit your exposure and maximize your potential. Why do I keep saying that? It's because that's the only way to go after something like this. Okay? This is called a butterfly's guide to expected moves. tonight's presentation displayed the setup for the butterfly. You may or may not know, okay, the butterfly is an age-old option strategy that takes on very minimal risk and creates potentially massive returns. The butterfly, in conjunction with the correct understanding of SPX expected moves, can be an incredibly powerful combination. This is what a butterfly happens to look like. Now, I don't like to intimidate people with risk graphs and so forth, okay? And I'm going to tell you something about this risk graph. This risk graph isn't an ideal world. That's a max return, okay? You're not going to make that. You're not going to make that. You might be down here, okay? This is like a $200 return. What I want to show you, though, is on a butterfly spread, that's the max risk. The max risk on this trade is a whopping, 15-cent debit. If you do one contract, that's equivalent to risking $15. What can you make off of it? I know that this risk graph says you can make almost 500, but forget that crap. Okay, we're going to get you in and get out of these trades for stuff like if you can make $200. Do you think it's worth to risk $15 to be able to make $200? Is that going to happen all the time? Absolutely unequivocally, no. But who cares? So what? I lost $15. I lost $15. I lost $15. Home run, you just made 200. Think about that for a second. You could lose a couple of them. See, this throws people off because everybody's like, I want me a high probability strategy. Well, I'll tell you what, this has a high probability, okay, of making money. The strategy itself, you may strike out 2-3 times in a row, but does that matter? No, because on the third or fourth time when you hit the butterfly, it's gold. And that's what you have to realize about the butterfly strategy. Very, very minimal risk, okay? Very, very big return. By the way, this was the Analyze tab I was referring to earlier. The most feared place that you could ever go on the Thinkorswim platform. So it's my baby. Actually, the Analyze tab isn't really a baby. It's my brother. I'm pretty sure I'm related to the Analyze tab. Spend enough time with it. This is what you want for a strategy like this. By the way, people always ask, can I lose more than $15 in this? Absolutely unequivocally, no. In fact, this is a cash settled instrument. So you can't get put stock early, stock can't get called away, right? There's even implications for taxes that can help you in the SPX. Do people know that? Okay? It actually, it's what they call the 60-40 rule. For those of you that are totally geeks, you could read about it. It's called Rule 1256. Rule 1256. By the way, I'm a walking, Britannica encyclopedia for all the rules and regulations because I spent 15 years in the brokerage world. I can tell you everything about every single product pretty much out there. This is what you want to trade these butterflies on, right? But you could do this in equities. You can do this in the spiders. But I like it. You have a $2,800 product that you're not substantiating more than $15 of risk on to try to make. And again, I'm realistic. Make $200 off the 15. And I'm just doing one contract. Why can't you do 5? You could. It depends, okay? Characteristics of butterflies around expected moves. The butterfly has historically been a lower probability trade. However, knowledge of the expected move provides the savvy retail trader some edge. Okay, that's what we're talking about here. The savvy retail trader can get edge. Now, if you look at this particular butterfly, this one has what they call a central strike right there. That's the middle of the butterfly at 27.60. You'll never guess that corresponds to the expected move of this week. It corresponds to the expected move. I'm giving you that one. There is significant profit potential with even minimal moves in the market. This trade can be placed multiple times a week. The trade need not be closely monitored. And exit orders can even be placed GTC. For those of you that don't know what GTC is, it's good till canceled. Losses, minimal capital. The losses could only be minimal capital because you're only placing minimal capital, even if the markets move massive. And I just got to stress that again, right? Who here could have used this back in the December timeframe? Anybody? Anybody? When everybody was like, I'm long all the stock, I'm getting killed in December, I'm like, we could just trade some butterflies, get back, get hedged. It's easy. It's an excellent tool for those seeking, potentially really huge returns on weekly options. And again, it's just such a straightforward standard butterfly. The butterfly part is easy. Okay, what you have to know is how to align this butterfly and how to get it on the edge of the expected move. Building butterflies around expected moves. Do not let these options intimidate you. The spread below is being done for a 15-cent debit. But this spread, okay, and this knowledge, I always say this is a chainsaw in the marketplace, right? That's the best analogy. You wanted to cut down a massive tree, use a chainsaw. But if you don't know what you're doing with the chainsaw, you'll probably lop off a couple of fingers. The same is true of a spread like this. Use this correctly can be totally effective in creating returns. Used incorrectly, you're going to cut off a couple of fingers, okay? You need to know how to use these butterflies and, more importantly, how to build these trades around the edge of the expected move. And I'll stress that, okay, pretty much till I am blue in the face, is that, again, it's all about going out there and aligning this, if you will, to the edge of the expected move. Watch this one, okay? I just jumped back to the edge of the expected move. This one, it's aligned right there. Why? There's a pretty good probability at some time during the course of this week that we hit to the downside. But if we miss it, will I be crying? Okay? Am I going to sit there? Am I going to cry over the fact that I missed one? Absolutely not. Okay? Why? Because I've been doing this for a while, and I actually know, right? I know without a shadow of a doubt, if I miss it this week, I'll hit it again next week. Okay? And we'll actually teach you exactly how to do that. Fear not the butterfly spread. Maybe you don't know options. Maybe you have limited options experience. We can show you how and precisely when to place these butterflies. And that's important. Around the expected moves, it's a few hours. What we do here at TheoTrade, we create detailed recipes for every strategy, including, of course, butterflies surrounding the expected move. It's baking a cake. It's a recipe. It's a flight, like a pre-flight checklist. This is what people have to trade with. Okay? What members are saying. Hey, awesome TheoTrade peeps. First, let me tell you how much I've enjoyed TheoTrade. I started with the in-out spread class and recently purchased the butterfly class. Okay? Come the first of next month, I will likely purchase TotalTheo, okay, because of the value. Okay? The content is so much. As I told Jeff in an earlier email, okay, I'm pacing myself. Not to mention the fact you fine folks also scored me a sweet commission deal at TD Ameritrade. By the way, we're hooked up with all the different brokerage firms. I love you guys. By far the best value in trader education anywhere. First and foremost, holy crap. Listen, we do our homework over here. Every other education you've ever been to, and people go to tons of stuff, right, is like nursery school compared to what we do here at TheoTrade. We give you more for free, okay, than you could pay for at any other education firm, but you need to see this stuff. This is what you need to know, okay, to successfully enter and exit the expected move butterfly spreads. And I'm telling you, before I go any further, okay, you need to know this to be able to do this strategy. Please don't go at it yourself because you're going to lose, even if you lose a few $100s taking shots at this, why would you do that? Okay, learn how to do this, learn how to do it correctly the first time. First, what makes the most viable expected move butterfly spread candidates? As I said, could you do this in Apple? Absolutely. Could you do this in the SPX? Oh, yes. Okay, we're actually going to show you, though, specifically where this stuff works the best. Next, we're going to tell you what volatility you should seek out. Like, what? Yeah, options have volatility. We're going to tell you which volatility to go after. Next, what options expiration do I select? You're like, uh-oh. You do realize that there is what? There's a Monday, there's a Wednesday, there's a Friday. This week, there's also a Thursday. Which one? I'll tell you what. You can actually select multiples. You could actually do multiple trades within a given week. We'll tell you exactly how to do that. Next on the docket, what should be the strike prices of the expected move butterflies? That basically means, where's my fly going? Where's my fly going? Should I do the 2760? Should I do the 2780? Should I do the what? Should I do the call butterfly? Should I do the put butterfly? Should I do it in the SPX? Should I do it in the spiders, the IWM? You realize how many options there are? There's a lot. How do I build the proper trade around the expected move? How many contracts do I do for my account size? By the way, maybe you have an IRA. Maybe you have what? Tax-deferred account. Can you do this in a tax-deferred account? Of course. I trade in a tax-deferred account every day. TheoTrade. Recipes and trading. This is what we do. This is what we do here at TheoTrade. We answer all these questions. I mean, trading really is answering about the what-ifs. What might be a good candidate for the butterfly around expected moves? What's the correct options expiration cycle to buy my butterfly? How much capital do I commit to these butterfly spreads? What's the strike price? Okay, the options do I buy? How many options do I sell? We have the answer to all the questions because we build recipes with definitive criteria and checklists for each strategy and each unique variable. When I talk about each unique variable, what if the stock goes up? What if the stock goes down? What if expiration is coming? Okay, what if I'm assigned early? I can go through all the variables. They're all covered in the checklist. We have the answer to all the questions. The right probability, how many option contracts. By the way, probability is essential. Probability is essential in the butterfly, okay? When do I close the thing? What if the market moves big? What's the correct return for the strategy? Correct return for the strategy is critical here. What if the stock rallies massively? Can I fix a losing trade? It's the how, the when, the why, at what price. But it's just the beginning of all the variables that you're going to face while buying butterflies surrounding expected moves. Okay. The secret, it's found in the sauce. You know, you always hear that the secret's in the sauce, but everybody realizes you can go right now onto Google and you can actually Google what's a butterfly. There'll be literally 5,000 different sites that'll tell you what a butterfly is. None of them, though, are going to tell you what butterfly to place, what exact strike price is, what the expected move is. That's what this is. This is about years of fine-tuning a trade setup and criteria. Right? We've been working on this stuff since 2015, before those weekly butterflies, okay, or before the weekly options even came out, because we knew they were coming out. We were looking for this. We spent years fine-tuning this stuff. If you want the criteria to build a butterfly, okay, surrounding the SPX, you need this stuff, because this is the kind of returns, okay? This is the butterfly spread in action. Here's one that I actually did in Microsoft. It's the opening position. This is the closing position. Now, I put this one up here, and the reason I used a July trade, I used a July trade simply because I wanted to show you one in Microsoft that had a little bit of a funky ending to it. This is an interesting one, too. It's a butterfly around an expected move of an earnings announcement. I paid 30 cents for the butterfly, and I made $1.43 on it. Okay, and the close is a little bit unusual to it. And that's why I wanted to pick this one out, because it's a butterfly around an earnings move. And this one, the earnings were on a Thursday. I opened the trade on a Thursday, and check out the date. And then I closed the trade on Friday. It's gold. We actually hit that one out of the ballpark. The other one that I actually want to show you on here, okay, is one that was done in the SPX. This one is very recent. Okay, this is the last big one that I hit. And listen, the last couple of weeks, a little hit and miss. This is the last big one that I hit. Okay, the exact date and time. I put this thing on January 28th. Took it off what? Okay, February 1st. Opened it for a 20-cent debit. Closed it for a $3.05 credit. It was an absolute home run out of the park. Okay, because this is what I just told you in the risk graph. You shouldn't expect a $3 credit. Why did we get a $3 credit? Because it landed smack on the expected move. This is actually a call butterfly, right? At 27.10 during the rally, came right up to the edge of the expected move and hit it spot on. You got to learn how to do this stuff. This is the Butterfly's Guide to Weekly Returns curriculum. First, we teach you how to use butterfly spreads. Okay, your risk one to potentially make as much as 5, always minimizing the risk. Okay. The second thing we teach you is how to do set it and forget it strategy. You can put it on several times a week without having to continually monitor the positions. Okay. Third thing we go into, building your butterfly around expected moves. Obviously, we've got to build this thing in a step-by-step criteria. And we actually talk extensively in this course around expected move, what we call predictable or manipulated ranges for every stock, ETF, or index. We also will give you, we will give you a script of how to do this. Like if you don't want to do it, by hand, you can actually script it out. We have a script written for this, meaning that it's a study that does it for you. Okay, you're going to learn that butterfly spreads, they're perfect for small accounts. I don't care if you have a $2,000 account or a $2 million account. It's a good strategy. Okay, you could do this inside of an IRA, and you're also going to learn what strikes, what expiration period to select that'll give you the highest probability of success, what's going to make the best candidate, and again, how to minimize your risk and look at returns before ever firing off a trade. You're going to learn stuff of insights of risk that you've never seen in classes before. The stuff about the expected move, okay, is worth, okay, the cost of going to the class alone. But here you're going to learn also to put the strategy on around it. The class is the Butterfly's Guide to Weekly Returns. I am the trade instructor. It's a 4-hour course. It's available already. It's immediately. You have 24/7 access. If you want it, okay, you go. You can start listening to it tonight. I know that's what everybody's plans are for this evening, right? You're like, I'm going to listen to a Butterfly's Guide to Weekly Returns. I do. I'm crazy. I'm caffeinated. The class slide deck that includes, okay, entry and exit criteria, the checklist, it's available immediately for download. And this class qualifies you for reduced commission rate. The reduced commission rate, TD Ameritrade, okay, E-Trade. We have reduced commission rates now at multiple brokerage firms. Okay, feel free to ask us. I cannot mention the reduced commission rate because it's that good while live. You can ask that, of course, in the chat room. We could post it in there for you. The class, okay, is $197, right? We have a little bit of a deal for you, of course, this evening. So this is the entire course. All the course curriculum is listed right here. I'm going to show you a page in just a moment that you can go to that. Before I go any further, though, you've been there and you've done that. You know, I know that everybody tunes in to stuff like this. Okay, they tune into this. They go to a million different, webinars. And, oh, you've been through the gauntlet. People have been through the gauntlet of sales pitches, paid classes, indicators, what I call secret squirrel black boxes, and more. And you find, I just buy this one last thing. It'll make all the difference. But wait, there's more. You have to buy this indicator, and you have to, subscribe to my trading service. We've had enough of this garbage. We really have had enough of the garbage, the sales pitches, and we try to put an end to it. And I hope you guys appreciate that this evening I spend the time, okay, educating you this evening. I want you to walk away, okay? I want you to walk away. You're actually learning something here other than just a big sales pitch, okay? What we're doing here at TheoTrade is disrupting financial education. TheoTrade is built by professional traders. Everybody here has a minimum of 15 years of experience. We don't have any professional salespeople. Nobody that's on this crew here at TheoTrade has ever worked in any sales position. They've all worked, the trading floor, hedge funds. A couple of them worked at TD Ameritrade. Okay, there was actually one guy that was just an awesome futures trader. I watched him for years while at TD Ameritrade. It's the first guy I hired. It's Tony Rago. Educating you is our only goal. We're going to demonstrate that. We're going to forever change the way that you view education. And we want to introduce to you TotalTheo. It's unlimited streaming monthly membership. It is a membership. What's TotalTheo? It's a membership. It's the Netflix of this entire business. Okay? It's the Netflix. Everything that you're ever going to need for trading. Everything that you're ever going to need. This is TotalTheo Unlimited. It's only $99 a month. It includes the Butterfly's Guide to Weekly Returns. It's included, okay? In addition to this course, which I said, it's ready to go. The Butterfly's Guide, right, to Weekly Returns is, when I say in the can, you can stream that tonight. But you'll also have access to over 81 additional trading classes. Those are available immediately. They're on demand. There are also new monthly classes. Okay, meaning that February, we've already had 2 classes. March, there's classes coming. There's classes coming in March. You'll have access. It's $99 a month. In addition, it includes a live trading chat room. What's the live trading chat room? We trade all day. I know not everybody can attend. It's okay because you get everything else on here too. But if you want to trade with us all day, we broadcast 6 hours a day. Next thing, indicators. People always sell indicators. They're like, it's a red and green flashing arrow. It does this. You must have this. We have 59 proprietary indicators and scans. We will give them to you. Okay? What? $99 a month. How long do you have to sign up for? For a month? We don't care. Wait, sign up for a month. You'll love us. We believe that you'll love us. You'll sign up for another month. And hopefully after that, okay, you stay with us for life. We also have a mobile application. Not everybody can be in front of the computer. We have Android. We have, obviously Apple. We have mobile applications. Why? Because, again, you stream on the go. You can actually download our classes, fly at 30,000 feet, and watch us do a class. We email you out trade ideas. People want to see portfolios and trade ideas. We got that. We have daily coaching sessions with timely topics. This is continued education every single day. We don't just talk to you for 6 hours and go, follow my trade, follow my trade. Half the day is coaching sessions. The last but not least, instructors directly answer your trading questions via email. All of this is TheoTrade.com/all. It's all available, TheoTrade.com/all. Now hang on, because I want to show you something, because everybody has asked this. Can I just buy the butterfly class? Yes, you can. You could buy the butterfly class as a one-time fee of $197. But we're pretty confident that you're going to like TotalTheo. We're pretty confident that you're going to like it so much so, okay, as if we're giving you $100. Take the money. What do I mean by that? Okay, TotalTheo, the unlimited streaming, is $99 a month. That'll give you access to this class and everything else. So it'll give you the 81 classes, new monthly classes, live trading chat room. Everything's archived. By the way, every single second of every single day is archived. That means, okay, it's like Netflix. You miss something, you can rewind it. Do you know if you actually hear us while we're live, if you hear us, you can actually rewind live video. Okay? We have DVR, mobile applications, email trade ideas, trading indicators, daily coaching sessions. We have everything. Why do we do this? Why do we give it away for $99 a month? Okay? Why do we give you basically $100? Because we're so sure you're going to love us that you're going to come back the next month. If you sign up, okay, for TheoTrade, you can cancel after 1 month. But we're so sure that people are going to love us, okay, that we give them a $100 discount on this. A little bit about what our members are saying. Thanks, Don. Just finished my very first quarterly trading report, and I grossed 21% ROI. Thanks for all the help. Looking forward to intraday course tomorrow morning. Fantastic service. I became a self-directed, okay, with my trading through the education I got here. Thanks, TheoTrade. I'm up 4,000 this week. I just wanted to let you know, Don, how much I appreciate him and what he does for me. First time ever my account is in the green. By the way, I hear that all the time. This is the first time ever I've actually made money in the market, okay? This stuff is important to me, right? This one and the other one is really important. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life because of this approach. And I'm sure that I'm not the only one. David. With that, I'm actually going to go into TheoTrade.com/all. Again, I'm going to answer a couple of questions, and I want you guys to know the exact web address to find all of this at, okay, is of critical importance to me that everybody kind of gets this and gets this down pat over here. It's TheoTrade.com/all. Again, TheoTrade.com/all. So again, as I said, I'm going to show you guys a couple of things on our site here momentarily. So, and I'm going to answer a few questions because this, by the way, this is the site. Let me zoom into it. As I said, okay, just click right there, add to cart. It's $99. It's the unlimited monthly streaming, and it includes the Butterflies Guide to Weekly Returns class and the entire trading library. You know, if you guys want to know what the classes look like, I'm going to show you that here momentarily. In fact, you know what? It's perfect time. Okay, go to the website. By the way, after you enroll for it, let us know. Chat in over here. I mean, for those of you that are into this, if you like it, let us know. Okay, we have what, you know, just shy of 1,000 people on tonight. I want to know if, you know, if we're doing what we believe is right by you. Okay, do you see the same? First of all, this is our member chat room. Come in here. It's TheoTrade live trading room. This is where we broadcast every single day. This turns into a video player. Here, okay, is the chat room. This is everybody talking to one another. There are, okay, currently over 3,184, okay, members. That's as actually of this weekend. It's over 3,000 members now to TheoTrade. And we're constantly adding more instructors. We're adding more email support because, well, all right, we want to be able to support you guys. The next thing, all right, this is a start here menu. This might seem a little intimidating right up front. And when it is intimidating, like, we get it. So what we do is we say start here. We want everybody to start here, meaning that options 101. Maybe you have no experience whatsoever. But on the flip side, maybe some of you guys know a bit about options. So you jump forward, maybe options 301. Okay, maybe a little bit about order execution. Maybe you learn about getting your risk under wraps and hedging ideas, crash course in option Greeks. I'm telling you, at TheoTrade, if you put, okay, a strategy, you name a strategy, you name a topic, and I'm going to show you, okay, that we have a session on that, all right? I will show you a session on it. By the way, somebody was asking about a discount in Canada. I will tell you precisely what you can do in Canada. You have to email us for that. But if you're in Canada, first of all, we feel bad for you because the commissions are expensive. We'll help you on that front for sure. Okay. The next thing I want to show you. This is the option strategy classes. This is the class archive. Okay. When I say the archive, we have option classes, option newbie classes, technical analysis. This is bar none. You know, I was picking on charts a little bit earlier. This is bar none the best place that you could possibly go for technical analysis. Okay. We have on board, okay, a CMT that writes the questions for the CMT tests. We have Jeff Bierman that if you have ever been on Thinkorswim charts, Jeff Bierman built most of the studies for the Thinkorswim charts. And the guy's a professor of finance, teaches a master's class, okay, at Loyola. Technical analysis is unbelievable here. These are all the different genres of trading, trend trading and futures and stocks, okay? Mindset, all right? Slim Miller's unbelievable in that. We actually have a class that Slim Miller taught, right? That initially sold for $1,000, just that one class. There's 81 classes in here. Look, here's some of the classes you'll have access to right now, okay? Here's a Butterfly's Guide to Weekly Returns. This is the class. This is what we just talked about this evening, okay? All I have to do is click on it. We're rolling. Roll tape, okay? We could go all day, all right? Click to download the slide deck right there. Now, portfolios, duration portfolio, fruit fly portfolio. These are portfolios that you can track. Archives, all right? What do I mean by archives? These are the archives, all the different class archives. And you want to access, okay? Then we have member home. All of this is completely searchable. What that means is you can search for any topic that you want. Even if you're not into options, somebody was like, hey, you know, I'm not that into options. It's okay. We'll get along. You can trade futures. You can trade stock. We're built for you. Okay. Again, TheoTrade.com/all. You can also hit us right here. I know it says leave a message, but we're live on support. You can email us or you can call us. All right. A few things that are coming up in terms of questions that I want to get to right now. So let's get to it. All right. First one that I saw in here. Oh, by the way, somebody said, do you talk about futures trading throughout the course? The course of the day? Absolutely. We have a multitude. We have a multitude of futures traders in there. I think you guys will love Corey Rosenblum. You'll absolutely love Tony Rago. Those are the two main futures traders. If you're into more commodity futures, you're going to go after Slim Miller. Next question that actually came in over here. Is this include the risk twist spread as well? Yes, of course. You know, the risk twist spread class is in here. No question about it. Listen. What we give you, as I said, it's Netflix. Like when you go into Netflix, you're like, there's no way any human being could ever watch everything on Netflix, right? You're going to feel the same way about TheoTrade. That's why I put this together. We realized there's no other education companies at any price. You could pay $20,000 and you will not get as good of an education as you will here at TheoTrade. You know how I know that? Okay. Myself and a gentleman, Brandon Chapman, that works here, we wrote a course, okay, for the education firm for TD Ameritrade. That course was an 18-month, what they called a PhD course. That course cost $24,000. Okay, we wrote that book, and we give you more here at TheoTrade. It's $99 a month. And we could do it because we have over 3,000 members here. Next question, and this is a fair one. Is this a membership for $99 a month? Can I cancel at any time? Another one said, can I get out of TheoTrade? Can I stop? Yes, at any time you can stop. All right. It's $99 a month. There's no minimum. Like you don't have to sign up and be like, oh, you're in this for a year. $99 a month. But we're so sure you're going to like us that we hope that you never leave. I mean, that's the idea over here. That's why we're doing $99 a month. Next question that came in here. Can I do these trades in my IRA? Okay. Absolutely. Almost every single class that we teach could be done in an IRA. We even teach you to use futures in your IRA if you so choose. Okay. Another person said, I can't make all of these sessions live. Okay. Will these things be recorded? Everything is recorded. Every class, every session, every coaching session, every live session, everything is recorded. Okay. We record 100% of material. It's posted the end of every trading day. Next question. I can never get my head wrapped around options. Will I be able to follow along with the classes? Of course. That's actually why I showed you start here. Remember? Start here. Okay. Don't hesitate to go to start here. Please. Everybody should start here. That's why we call it start here. Okay. Next one. How do I get started here? I don't have that much time to trade. I work full time. Will I be able to do this? Yes. But if you're so inclined, I suggest that you email us. You can email us and say, where should I start? This is what I'm into. Where should I start? We'll email you right back. Okay. I love this one. Can I access Don in the future? And how? Yeah. Support at TheoTrade.com. By the way, we use a common inbox. That goes to all 7 instructors. Support at TheoTrade.com. Hit us up. Just, title it like, I need to talk to Don. And we will, we'll absolutely, they'll put you right through to me. Okay. Can I reach other instructors? Yep. Same thing. I love that. That's a good follow-up. Okay. Do I have, next question. Do we have other classes? Yeah, we have, 81 classes right now. 81 classes over there. All right. Somebody said I'm having trouble purchasing it in the cart. I am not. I just clicked on it and that was no problem whatsoever. So please, if you're having difficulty getting into that, by all means, please feel free to either call us, okay, or you can try a different browser. I mean, what are you using? Microsoft Edge? Nobody uses Microsoft Edge. I'm actually on Firefox over here. By the way, it says, see, we are here. Come in here and actually start the chat. We'll get you taken care of. No questions about it. So start a chat with us. All right. That and the other thing is we have so many people on tonight that our servers could be a little bit overwhelmed. Oh, there. By the way, that's not Jeff Roth. That's actually one of mine. That's a baby. It's iPood. The iPood. That's one of my babies. So I have a lot of those babies. That is not so much babies anymore. They're starting to get bigger. They get bigger. You got to stop feeding them. Scanning capabilities, absolutely. In fact, what the scanning capabilities, we have tons of scripts written for scanning. Jeff Bierman and I worked on the scanner at Thinkorswim for many, many years together. That was actually part of my group's job. Okay. Do we provide pre-market open? Yes, we do. Okay. We actually do talk about in the pre-market. We even send you a pre-market email in the morning. I think you guys will love that. All right. By the way, I'm assuming all the classes, if there's detail, I understand this webinar is an introduction. There is incredible detail in every single class. That much I want you to know. However, with all that detail, I strongly suggest, please go through the start here. We want you, okay, to understand from some of the basics to the extreme, right? All right. Anyway, let's look through here. So I've been to other training sites and turns out there's a ton of crap out there. How are you guys any different? Okay. I'll tell you what, I'll put that one through the Pepsi challenge any day of the week. Okay. You will never find anything as robust as what we're offering here at TheoTrade with the depth of courses. I'm telling you, you sign up for $99, you get in here. You don't like us after a month? Tell me, email me personally. I want to know. But at the end of the month, if you do like us, I want to hear about it. And if this is not about me, and it's $99 a month. Are there any discounts? No, it's $99 a month. We don't do any like trial discount. It's $99. For $99, we're going to give you access to everything. And again, we're even giving you access to our mobile. Just the mobile, okay? The mobile platforms alone cost us a small fortune to be able to do. Again, I'll put that up against the Pepsi challenge any day. In fact, people have paid $10,000 or more for this stuff. Email me at the end of a month. I want to hear like, hey, this was so much better than what I paid $10,000 for. Okay. Unbelievable. That's the kind of stuff that we want to hear. With that, I got to wrap it up. Again, the chat room is all throughout the trading hours. Okay. We will support you in Canada. We will talk to you about Canadian brokerages offline. You have to go to support at TheoTrade.com. We'll talk to you about the Canadian brokerage firms. I happen to have a little insight. Remember, I worked for TD Ameritrade, but I'm very familiar with Toronto Dominion, a few of the banks up there. So I think you guys will enjoy that. By the way, yeah, market sentiment. No, but I definitely worked on that one with Jeff Bierman. So we're right there with you. All the different indicators. I think you guys will appreciate that as well. With that, again, TheoTrade.com/all. Again, that's TheoTrade.com/all. If you need me after today, okay, number one, you can hit me up in the chat room first thing in the morning. By the way, tomorrow, you're brand new, come into the chat room and say, hey, I'm brand new over here, right? In the chat room in the morning, there's usually 1,200 to 1,500 people in there right at the opening bell. We kind of peak out at about 2,000 people throughout the course of the morning. Your name's not going to get lost in there. Say, hey, I'm brand new. You'll get welcomed by the rest of the crew here, not only at TheoTrade, but our clientele. With that, I want to thank you guys very much for joining us this evening. Have a wonderful evening. Hopefully we'll see you tomorrow morning, bright and early in the chat room. Have a good evening, everybody. Bye-bye.